Hello and welcome to a brand new show of CEO at Work. And in this episode of CEO at Work, we are coming to you from the R&D center of Cipla. Now, Cipla is one company which I've admired. I've admired for the core philosophy they followed, which is centered around care for patients, reward for shareholders, and innovation where they've made complex processes look slightly easy. Cipla stock is at an all-time high, and if a pantheon of great companies in India is ever to be made, Cipla will surely find its name on its pedestal. My guest on the show today is the Managing Director and CEO of Cipla, Umang, and in his, I would say, brief stint of about 6 years, he's made a magical turnaround in Cipla. Shareholders are excited because stock is at an all-time high. Employees are happy because they're getting rewarded for the change which is happening. Umang, fantastic to have you on ET Now. Thank you for joining us.
Very nice to meet you. Thanks a lot, Nikunj. Thank you for being here with us.
It's a lovely place.
Thank you. It's our R&D center. It's where the work of a product starts. It's the center that's given us the vibrancy in our business.
So what is the importance of this R&D center for Cipla?
So we have about 1,000 scientists who work here, and each one of them is responsible to make sure that our product innovation continues. We've got some of the great products like our inhalers that came out from the centers here. We've got the recently launched lenalidomide in the US that was here. So we've got all our big products essentially start from the buildings here, go to our plants, and this is where the journey really starts.
So this in a sense is like really, I would say, the brain of Cipla in terms of innovation.
Yes, absolutely. It's the brain, and many times products also come back here when we try to improve them. So this is the one center, this is like the home where everything starts. Children go out to the plants, very often come back to get a little bit more of thing. So this center keeps all our products intact and brings out new ones.
The Cipla stock is at an all-time high, but not everything in the pharma is at an all-time high. There was a time when all pharma companies would go up like a rising tide. There was a time when if there was a downturn, all pharma companies would suffer. But right now it's getting hard for investors who are watching the show and for pharma shareholders to understand. Why is that the pharma world, which was as it is complex, now understanding the pharma cycles is getting even more complex?
I think it's got to do, Nikunj, with one or two themes. The first theme is that a lot of people had a massive US business. And I think our scale in the US business, which is Cipla's scale, is not at the same level that the others had. So when you reach a certain scale in the US, and with the high competitive intensity there, the pain has been immense for many players, us included, because of the pricing pressure that's happened there. But look around and see what's happening in India. It's just phenomenal. I think there's just this incredible deepening, and India-based companies which have high revenue out of India have done really well, right? And even if you look at our peer set, India businesses are moving really fast. So I actually think that there's a shifting in where consumption is happening, where the last 10 or 15 years the consumption happened in the US. We're now at a stage where a lot of the emerging markets are now having high consumption sectors. So India is one, China is the other. We think that the Philippines, Vietnam, Indonesia, Africa, these will emerge as new places where healthcare will shift, right? So depending on various points in time, you will see the shift happening in the world. So we're very excited about how India is growing as a market.
So the puck has moved. It's not only for stock market investors, it's only for pharma companies also the puck has moved.
Yes, and absolutely. I think that the new centers of consumption are becoming the emerging markets. Yeah.
Are we too early in calling this trend? And the reason why perhaps I'm asking you this is, look at the per capita spend in India versus per capita spend in US. We are an iota of what the Americans are spending. So when you're calling out this mega trend that the center of gravity for pharma companies like Cipla is moving, what is the basis of this?
So I think the basis of this is just it's no different than the domestic consumption theme, right, that is playing out today in India. So every time I speak to the FMCG companies, they tell me about how demand's increasing in the tier 2 to 6 towns. And if you look at India, we are really at a very nascent stage in our healthcare. A lot of our consumption happens in our metros and tier 1 cities. The best hospitals are there, everything seems to be there. Now the government's announced this Ayushman Bharat scheme, right? Every family gets 5 lakhs. I see hospitals now talking about setting smaller centers in the interiors, tier 2 to 6 towns. And I think that's where we think consumption is going to shift. So for us, our tier 2 to 6 towns are actually growing at the rate of almost 300, 400 basis points more than the metros and tier 1s. So there's an incredible deepening of this healthcare system. I think in the metros and tier 1s, Nikunj, let's go back 10 years. We used to talk about stents as a really big thing, right? Somebody had a problem with the heart, a stent, it was considered a big thing. Today, there are just so many stent centers all over metros, tier 1s. In fact, tier 2 towns now have it. Valve surgeries, we're all living longer, right? So all of this was earlier used to only happen in the West. It's now coming back into India. Oncology is another great indication, right? I think the level of cancer care in India and the treatment rates are as successful here as much as they are outside in the West. So I just think that as we live longer, I just think that as awareness grows, this is a big shift we are seeing. And then COVID, right? So when COVID came, a lot of us became very interested in wellness. We suddenly realized it's so important to stay healthy that what we were ignoring to invest in earlier has now become, I myself went and got a Fitbit watch just to make sure that I was moving enough, that I was sleeping enough, right? And we see this manifestation across many people, right? Multivitamin sales are up, people are conscious about what they eat, tracking what they're doing, and they want to be reached about their health. So, whether it's digital or otherwise, it's just this whole deepening phenomena that we see in India.
Okay. So I completely understand that awareness, ability, and perhaps distribution are some of the factors which will increase the Indian pharma penetration. But then historically, Indian markets are governed by price controls. You spoke about stent. Well, guess what? There was a price control.
Yes.
There. We know that the number of drugs in the DPCO list, that's always a changing number. So isn't that the biggest risk for a market where potential is large, but for a pharma company, if you're selling and if you're not compensated, then it's a no-go?
I would agree. And I think the only thing that I would like to say here is that every time India is this huge price-sensitive market, every time price has come down, volumes have shot up. So in the overall equation, you may lose 200, 300 basis points, but you gain a huge amount of volume. So I think one is just the expansion of the DPCO, and pharma has been in that DPCO framework pretty much for the last 20 years. But I think if even the stent example is great. Just look at how many centers have come up. Now, somebody may question saying, the price of stent reduced, was it as economical for patients? Yes. As economical for centers? Yes, because look at the number of centers that have come up. So I think this demand and volume thesis of India, the 1.5 billion people we have, is something that, it's again the same bottom of the pyramid, what lies at the bottom. I think there's tremendous opportunity there.
So guys, we're just getting warmed up with the first part of our interaction with Umang. Now we move from outside the building to inside the building to understand the real process. But I would say in this case, the chemistry involved in how Cipla over the years has managed to do breakthrough work in making things which are complex and produce simple and extraordinary results. Okay, so we are now in the R&D center, and tell us about this place.
So this is our API R&D analytical lab. Okay. So what we do here is that we start with the APIs, we try and synthesize them, analyze them for impurities, and we try and create for them a structure which is similar to the structure of products that are sold in the market. So we have, this is pretty, so once you make the product, you also have to make sure that your methods are able to catch if there is any variation that's happening in the product.
So we're actually stepping into what could be called as a Cipla R&D.
Yes.
Oh, wow. This is the first time for me.
Yeah.
It's beautiful.
Yeah, so it's, we try and, the labs, we try and make sure that our labs are not as crowded, and we try and create centers where people can exchange thoughts. So this is, if you look through, we have, and we want to create more transparency across all our boundaries, and we want an environment where people feel good to work with each other.
When COVID happened, US FDA went on a back foot. They did not have time, ability, or capability to inspect. But COVID goes down, US FDA inspection
Yes.
goes higher. Do you see a lot of changes which are permanent in nature from the US FDA front post-COVID?
Well, I think the observations will make everybody improve their processes, right? And one of the things that the FDA does really well is to be able to get the industry to move to a level that is expected of them as things become more complicated. So once the nitrosamine impurities came, the FDA came out with some of the analysis that they wanted companies to perform, and processes and methods and equipment keep getting to the next level. So what we did here 10 years back versus what we are doing here today, there's a lot of difference in just how we try and characterize a product for the same level of impurity, same level of composition compared to the main product.
US market. Why is it getting increasingly complex to talk about a trend there? Generic pharma like commodity should follow a price trend. But incrementally, we've seen that every company has a different story to sell. So is it important to get the product right and importantly, the cycle right also?
I think the product cycle you can't time because the market is responsive to the number of people who are playing in it. I think the US is a highly consolidated market. I think among the markets in the world, 3 customers or 4 customers having bulk of the environment it's a really highly concentrated market. So now look at it, we are at least 40, 100, 60 Indian companies, but 3 or 4 major buyers in the US. So I think the equation is distorted. But also it's a function of how your base becomes bigger. Your innovation engine needs to work much harder to offset the price erosion, right? So if the base is 500, which is where Cipla used to be, you have to work hard to offset 50 million of price erosion. If the base is $1 billion, you're working harder to offset 100 million of price erosion. So, you can't set up these centers overnight and you have to be conscious about what products you're picking up. So I think that's the story of the US. But look at the India market. The volumes go up significantly. I think it makes so much of a difference in terms of the number of, where volume growth is significant, right? It makes it easier for innovation to keep growing.
Is the US generic market more like an Indian telecom market where price keeps on coming lower and lower? The size will increase, the reach will increase, your volumes will grow, but the margins you will command would be always under pressure.
Well, you could say that. You could say that depending on a product, suddenly your product margin improves because you have an opportunity to come in early.
That's a big statement.
Yeah, in the sense that if you have one product where you're exclusive, telecom has less exclusivity. If you have one, you might be $1 billion in the US and you suddenly have a product which can get you 500 million. So, you go up and over a period, your trend goes up. But I'd like us to just introduce a small tweak to it. The telecom story, growth story in India on volume has always been higher than 10, 12, 15, sometimes 20. In the US, that growth is, other than when the product goes off patent, is usually 1 or 2%. Okay. Right? So that's why you feel it more. Because when price goes down, the offsetting volume for you is roughly about 2% or 3% once the product is already generic. So it's not exactly like telecom. Telecom in India is still showing huge growth, even though price is deflating.
So let's look at the 3 important yardsticks. The short term for Cipla, the medium term for Cipla, and the long term for Cipla. Short term, when we spoke to you last, you were very excited about the US inhaler launches, the Albuterol family and what they've done. So what happens in the short term? What's the trigger for Cipla now?
So the short term, Nikunj, we are looking at, and I'd say short to medium term.
We are talking about 12 to 18 months.
12 to 18 months.
That's
so we
medium
have,
term.
yeah, which means, let's say short term is now to 18 months and medium term is a little bit
3 to 5 years.
3 to 5 years. So medium term, most of what we will launch has already been developed, right? So either we are successful in getting an approval or we are not. And I think we have the inhaler families, we have the complex injectables that we are after, and we have certain wellness categories that we are after. So I think those have been lined up both for Europe and for the US. And the India growth story will hopefully continue from a volume perspective. Medium term, what we are attempting to do is to create 40-50% of our revenues, which stays as limited competition. And that comes out of respiratory or inhalation, which is today is about 28% of the company's revenues.
That's a mainstay.
That's mainstay. We want it to be closer to 35, right? So the launches would help us and get us there. Then there is the complex injectables. That's roughly about 5-7% of the revenue. We want that to get to 10. And then you have wellness, which is about 9% of today's revenues. We want it to be higher than 15. So it's a tall ask from where we want, what we want to do. So if you add, wellness in an ideal state, wellness at 15, respiratory at 35, injectables at 10, we're looking at about 60% of the company's revenue coming from places which are not as competitive.
And when you say non-competitive, this is higher than the current aggregate margin of 20%. I'm using 20% as the base.
That is correct.
So the 60% what you'll get in the next 3 to 5 years will be higher than the threshold
Higher
margin.
than our threshold margin, right? And then, because of the moat we have, let's say in India or in South Africa or some of the emerging markets of the world in terms of our reach and distribution, the regular portfolio and the market growth also becomes some kind of a competitive advantage. So that's our overall medium-term strategy. And I think between medium and long term, we are looking at being able to get to more innovation, right? And so India, we have realized that whenever you innovate in India, for India, you eventually begin to see the market. Biosimilars came, we have a new biosimilar engine. We're looking at mRNA as an opportunity. We're looking at CAR-T, right? So we're examining all those innovations that can come to India and create a huge amount of value for our patients.
Okay, so now we hop across to the next lab.
Let's go.
So we go from a complex lab to an ultra complex lab.
Let's go there. Let's go there. All labs are complex. If you're not a scientist, all labs are
Everything
complex.
is complex. I'm going to ask you a very basic and a fundamental question. Cipla is migrating towards better products, higher margin businesses. But you have an emerging market business, the Africa business. And looking at the understanding, at least my understanding of that market and the efficiency of that market, that will always be high volume, low margin. What is the necessity for Cipla to be in that spectrum at all?
No, I think great question, Nikunj. The company started with the foundation of access, right? Dr. Hamid's vision was that we must be a company that offers access everywhere. And I think we've reached a point that we've redefined that access to say access where there are no solutions available. So if there are 15 people satisfying a certain market, right, then it's not an access problem anymore, right? It might be a price problem, but not an access problem. So what we are trying to do is get into areas, whether it's Africa, whether it's Asia, where we can bring something that benefits people because they're not getting treatment, right? So yesterday's HIV may actually be tomorrow's oncology, right? And so that's how we define access. So it's very interesting you asked this question. Sometime back, we started partnering with the MNCs. And the MNCs would come and ask me saying, Dr. Hamid fought for patents, not having patents, and you're partnering with MNCs. And I said, no, because this is completely synchronous with the vision of Cipla, which is to create access. The reason we fought patents was because we wanted more people to have product in India. And now that the multinationals are doing compulsory licensing and everything else, the objective is to get them to the rest of India. So we are all standing for access. So the low margin businesses, you may be right? HIV, we're doing it. But is there a challenge in HIV? Many Indian companies do it today. Is there a challenge in oncology? Yes. Can we make a cheaper version of oncology, right? And maybe that becomes the HIV of the future for the company.
I was looking at the decadal history of Cipla. Let's say in early 2000, it was about getting reach, getting size, and maintaining margins which were in mid-teens. Then came the era, or I may say the Umang era, where focus comes back to US, focus comes back on innovation, and focus on frugality and margin. So where is the puck moving now? Where is the puck moving in terms of the margin trajectory, the market focus strategy, and the innovation strategy?
Yeah. And I think, Nikunj, what we are going to attention is going to be innovation. So every time we're asked this question, whether by the board or by others, where do you want the margin trajectory to go? I think the guidance we received from our board is that this was not a company founded to create the highest margin. Yes. This was a company founded on care. And I think what's being, the guidance we're getting is your margins are at a level where, it will improve with scale, etc.
You're happy with the margins?
We're happy with the margins. Now, start making sure that you push your growth higher at the top. Right, so it's both come. When you have to push your growth higher, you have to reinvest back in the business, and so we've reached a stage at 17 or 16 we weren't there, right? To begin to say no, we want to push top line and margin is going to be here. We're now at a respectable portion for respectable level for margins. We now want to try and see how much we can put back into innovation, while still trying to improve the margin trajectory, but making sure that our top line kicker comes higher from a growth perspective.
But looking again at the basic construct of Cipla, it's always been, like you said, about care. So how would you balance both these things? Margin versus volume, care versus compulsion, shareholder demand versus promoter's vision?
So our pecking order is very clear, right? And it goes back to my first meeting with the promoters here. And I think Dr. Hamid was very clear. He said, I founded this company for patients.
Yes.
So if you come back to me 7 years later and say, Dr. Hamid, I made your company the highest margin company, I'm going to ask you, did you lose the soul of what I created? Those were his exact words. So what we're trying to do is find that balance in some way. So we will always be for patients first. In our set of shareholders, in our set of stakeholders, right? Our patient is the center of our heart. So we work for the patient. And then the shareholder is a very significant stakeholder for us. And our objective is to give the shareholder the return, either through the growth that we see in the top line or otherwise, right, by virtue of appeal, by virtue of impact. During COVID, a lot of shareholders came back to us saying, we're just so proud of what you did as a company. Right? And I think that's a bigger, for the rest of the organization who work here, that was a much bigger motivator than seeing that the margin expanded from X to Y.
And I just want to put it on record for our viewers that, Cipla went out of the way to help everybody. And I was also touched at different point in times by the help which Cipla as an organization extended. So all of us are really grateful to that.
Thank you. And we're blessed to have really good, strong people who work with their heart. And I think.
But I have two follow-up questions on COVID. One, COVID was more like a sugar rush for FY21. Then came the inventory write-down. So excess sugar got created and then it has to be flushed out. Is the COVID uptick and downtick everything behind the adjustment?
Yes, pretty much. I think we thought that we'd keep a little bit of inventory thinking it would roll, but I think in the last quarter we've even taken that out. So we're pretty much...
So Cipla feels COVID is officially over?
Yeah, it's officially over, right? Yeah.
COVID also, in a sense, changed the way how the entire R&D process is done, whether it's for vaccine or whether it is for production. Vaccines earlier were developed in 6 to 8 years, 8 to 10 years. The vaccines were developed in less than 12 to 18 months. Will that also give Cipla and other pharma companies some kind of an forward thinking that if we can do to vaccine, we can do to other drugs, which means R&D and the cycles and everything now will be contracting?
Yes, absolutely. I think there is a possibility to improve this by almost 20 to 30% in any case, right? So any process you see, you can always improve it by 20, 30%. In our case, I think there is a huge scope to make these processes more compact, to make more integration happen. And I think that the new equipment that's coming out is actually enabling that transition. So I actually do think so, that productivity can improve dramatically in the lab and in the plants. And the way out is through automation.
So my spirit of this question is that I'm just comparing IT. Each time IT companies have gone through a different platform, from enterprise to digital and digital to crowd, the margins have gone higher. Now that the pharma chemistry or the synthesis process and manufacturing is going to go through a technological evolution, AI, process changes, are we looking at a reboot for the margin trajectory, for the information trajectory, for the inventory trajectory?
Yeah. I think the margin trajectory in the case of pharma is still very linked to controls on pricing.
Okay.
Right? But if you're saying, does continuous manufacturing, which is the new manufacturing or more automated manufacturing, reduce costs? Yes. So the bias is towards the margins going up by virtue of the new manufacturing methods. But I think the other bigger thing here is that the footprint that pharma will use for the plants of the future will probably be 1/4 the size and intensity that we used to have earlier. So for example, if our API plant was as big as this room, we will now have just one portion of the room that will require an API plant if we do decide to.
So ROI will increase.
So ROI will increase.
1 million and countless people are thankful for the fact that your 1 million and countless people are thankful for the fact that your 1 million and countless people are thankful for the fact that your 1 million and countless people are thankful for the fact that your 1 million and countless people are thankful for the fact that your 1 million and countless people are thankful for the fact that your 1 million and countless people are thankful for the fact that your 1 million and countless people are thankful for the fact that your 1 million and countless people are thankful for the fact that your 1 million and countless people are thankful for the fact that your 1 million and countless people are thankful for the fact that your 1 million and countless people are thankful for the fact that your 1 million and countless people are thankful for the fact that your 1 million and countless people are thankful for the fact that your 1 million and countless people are thankful for the fact that your 1 million and countless people are thankful for the fact that your 1 million and co your factories were operational, supply chains were not broken down, whatever medication was required during COVID, you managed it and you implemented your duty, and the processes in a sense were intact. So let's preserve the moment. I mean, it's always when you come to the campus of a great company like Cipla, it's important to preserve, and I've been told that that is what we plan to do now. This is the R&D center of Cipla, and we're standing with Umang Vohra, and what we will do is that we will go out to the lovely garden and try and preserve the moment that ET Now, in a sense, was really grateful that Cipla invited ET Now and the entire unit to their R&D center.